Hey there, it's Chewy Terrazas. Let's talk about expectations today. You know, if you're buying apartment complexes, I typically focus on Class C and D, lower income properties, good old bread and butter neighborhoods, and we've got typically $100 per unit in positive cash flow. So what does that mean? Let's say you've got 10 plex. Well, that would mean 10 times $100 would be $1,000 positive cash flow. What's included in that? Well, you start with your gross income, take off your expenses. That's called NOI, net operating income. From that, you've got to pay your debt service, and what's left is your profit. So it's a nice little rule of thumb. You know what? They're not always exactly going to be like that. As a matter of fact, Class A and Class B properties, which are the nicer ones, they're called A's, B's, C's, and D's, the brand new, beautiful ones with fitness centers and swimming pools, are Class A properties. And then as those brand new ones get to be a little older and they're replaced by great brand new ones down the street, those are called B's. Well, I don't like investing in those. I'm really into the slightly older properties that we could tend to find a little more distressed landlords, get rid of them at hopefully better prices if you're out there buying right. And then we turn them around, transform. You know what I like telling my kids is we transform communities. We take rundown properties and make them safe, clean homes for people to live in. And it's very gratifying. I'll tell you, if you go after something just for the money, I found that people that are just chasing money don't tend to have the same level of success and joy from it as someone that's got a real sense of purpose about what they're doing. And I really take a lot of pride in feeling like we're creating communities for people to live in, and for that we're rewarded. You know, it can be a headache. You got to expect tenants to be demanding from time to time, and the beauty though, people say, well, I don't want to deal with tenants. Well, you know what, if you're buying properties right, you've got enough profit margin in there to account for having a manager. And let me tell you, I don't want to be knocking on people's doors asking for their rent either, just like you. So anyway, the whole point here was, what could you make on a complex? What's the right expectation? And by that rule of thumb, we've got a 20 unit complex, $2 grand a month positive cash flow. 30 unit complex, $3 grand. You get the idea, right? Well, the next thing that I might be thinking is, what about houses? How does that compare to houses? Well, people right now, a lot of my buddies are buying houses. Great time to buy houses or apartments. So if you're in the house game, beautiful. Just don't be on the sidelines, whether it's houses or apartments. But houses can make you more. They can make you 200 or more per unit. Let's just go conservatively and say 200. You'd say, well, geez, that's twice as much. Why don't I focus on houses? And let me end this little quick video by telling you, simply it's because, I'll tell you, I have a 12-plex that I really like, and it would have been a real hassle to go get 12 mortgages and find 12 deals and have 12 closings. Instead, I just found one little 12-plex and one little closing. A lot easier to take care of it. Found another little 20-unit complex, one little closing, and so different strokes for different folks. I like that, and whatever it is you like, I hope you have much success. Just stay in action, stay in the game, and that's it for today.